communities and the environment from wildfire. You know, we've seen in the last couple of years that wildfires are a big deal. I was in Paradise last year for 2 weeks, and the devastation there was absolutely amazing. I've never seen anything like that in my entire life. So we certainly hope that nothing of that scale or even close to that ever happens in this county, and I hope we can make a difference at the Fire Safe Council. We have a variety of resources that you can get from our website. It's at www.firesafesantacruz.org. And we can write that down somewhere if it's not available, or maybe it's on a brochure in the back. It is? Okay, so perfect. You don't have to remember it now. So some of the things that we do at the Fire Safe Council is we have a free chipping program to help residents reduce fuel loads around their homes and in their neighborhoods by disposing of, cut, and stack combustible materials. We also facilitate educational events such as what we're doing here today for the residents to help prepare for fire and reduce risks in their community. And then we've been doing monthly articles. Is Becky around? Where's Becky?
She was outside.
Okay, she's still outside. She's been doing an excellent job, Becky Steinbruner, in writing articles for the Santa Cruz Sentinel, for the Good Times, and for all the other publications, just on general fire safety awareness and preparedness. So she's been very, very helpful for us. Some of our planned programs that we have is we have a campaign to help residents harden their homes and make them easier to defend in the face of wildfires. And so what I mean by hardening your homes is to have that 100-foot clearance to get rid of the debris, limb your trees up, putting smaller screens on your vents, all things that we can do to make our homes a little more fire resistant, to slow the spread of fires as well. And we've also started this new program. It's called the Firewise program. Have any of you guys heard about the Firewise program? We have a few? Okay, good, excellent. So we have 3 in the city of Santa Cruz. We're the first ones to have these Firewise programs, and they're for neighborhoods that are in that urban wildland fire interface area. And so what I mean by that is it's where the homes meet up with the forest. And so they're doing a lot of great things and programs to try to reduce the risk of fires, helping out neighbors. We put out some recycling bins, some huge big 20 cubic feet ones. We put out 3 of them one day, and we had a get rid of your yard waste day in the De La Viega neighborhood. So we're doing a lot of cool things along that nature as well. Some of the other things we're doing at Santa Cruz City Fire is we've applied for grants and received grants to thin out that WUI area, the wildland urban interface area. So we're kind of thinning out the forest a little bit where it meets up with the homes, creating these shaded fuel breaks where we're getting rid of the debris on the ground, limbing up trees. It's not going to stop fires, but it's going to slow the spread of fires so we can get there and put them out. So those are some of the things that we've been involved with, and that's all that I have. So I am going to go ahead and turn it over to Peter Mesa. Mr. Mesa is an Associate Compliance Officer at the State of California Department of Insurance. He's handled consumer complaints against insurance companies as a result of wildfire losses. He's also worked in FEMA disaster centers following major California wildlife fires. He has served as the Spanish spokesperson for the California Department of Insurance. He's worked closely with the last 3 California State Insurance Commissioners and participates in many forums throughout the state regarding all aspects of insurance. So please give a warm welcome for Mr. Mason.
I'm gonna try. I've got 2 things I gotta hold on, so I'm gonna try. Because I can speak pretty loud if you all give me an opportunity, okay? Can everybody in the back hear me?
Yep. Yes.
Oh, look at thumbs up all the way over there. And you know what? I haven't even started and I'm already sweating. So I'm gonna take my coat out. That's all right with you. All right. It's a pleasure to be here. It's not because of the weather. I was just running. I was running because I thought I had the timing right, and I showed up like five minutes later than I wanted to. And so that caused me to feel a little urgency, but I feel good. I see a good audience here. I see folks that, you know, I can see you have a lot of questions. And we're gonna spend as much time as we can in answering questions. But I just want to go through some basics. So I'm with the Department of Insurance. A lot of folks understand a lot of agencies, and you know, there's a lot of state agencies out there you recognize just by the acronyms. You know, CHP. You know, it's a state agency. You'll know. But you know, you hear that, you know exactly who that is. And you hear DMV, and you know, you have other ideas of what that is, you know. But the state agency, the Department of Insurance, it seems like one of those areas where folks kind of think they know who they are or what we do and so forth. And the reality is that there is so much that we do. I've had folks that have been with the department many years, and they still don't realize that we do this and we do that. And one time we did a 3-hour presentation to a CAL FIRE conference, the state conference of the CAL FIRE, and they asked us to do 3 hours of the Department of Insurance, what we do. And it literally took us 3 hours, and we weren't really done after 3 hours. But the first one was an attorney. She showed up and did an hour worth, and I was going to be up last. And as she got up there and did her presentation, basically I started scratching out like half my notes, you know. She basically took half of my presentation out. The next person went up was a supervisor that's in charge of the financial analysis section, and basically went up there and ripped up the other half of my notes that I had to present. So I get up there and I'm supposed to present for an hour, right? Well, guess what? I had enough to talk about the Department of Insurance, and I held them for another hour, but it was important stuff, you know. So there is so much to talk about with the department. I'll just very briefly, the Department of Insurance, it's basically we're we're the police of the insurance companies. We regulate the insurance industry. It's a $334 billion, roughly, billion-dollar industry here in the state of California. That's what's collected in premiums annually. The largest insurance market in the whole United States. I hear a lot of comments, insurance companies talk about pulling out of the state of California. They're not going to pull out. Why? Because there's a lot of money in the state of California. So they may threaten to stop writing and what have you, and that's different. But you know, we've seen those cycles. They go through these little things that happen. Back in the Oakland fires and other situations. But it's the largest market in the United States is California. We're about the 4th largest in the world. We actually had nations come in, the whole Department of Insurance come into California, and we've been host to them, trying to give them a concept of what cutting edge regulation is about. So we get calls from all over the United States or all over the world regarding what we're doing in regards to regulation. These are challenging times, I will tell you, and I know that there's a lot of things going on. People are feeling uneasy. We don't lose insurance company too often, but we have. I've been with the department 19 years, it's going to be 20 years in November, and in all those years I've seen very few companies go under. We just had one go under during the Paradise Fires. Some of that is due because of different reasons. Every insurance company is required to have at least enough in reserves for 3 major disasters in a row. That's liquid cash, not invested in CDs, stock market, or in buildings and other things. They have to have that in the bank. So we're monitoring that on a regular basis. We have a financial, we look at the financial statements. And literally, the insurance commissioner can literally step in and kick the CEO. It's unheard of in any other industry. He can literally kick out the CEO and take over the company if he feels that the company is not handling their finances correctly. I don't know if you remember back in 2008 when the stock market crashed. AIG was getting ready to go under. AIG, the mama from back east, came to California and said, hey, wait a minute, AIG here in California is filthy rich. There's plenty of money in the reserves here in AIG California. So they came in and they were trying to take the money out. The insurance commissioner stepped in and he said, hey, that money is for California policyholders. You cannot touch that. And they realized the way everything had been set up, the laws and everything protected, and AIG, while it was falling apart back east and what have you, AIG here remains strong. So I want to just let you know that we do regulate insurance. We try to do the best that we can to protect the policyholders here in the state of California. So let's just talk a little bit. I want to get to your questions, and I think my presentation could be extremely long, so I'm going to go through some basics, and then at some point I think I'm going to pause it. I'm going to kind of, because there's different sections to it, and I think I'm going to draw your questions, and let's see if we can have some discussion. And there may be some things here that may be very important for us to just kind of have an opportunity for questions and back and forth and ideas maybe also. I had the opportunity to go to Paradise. In 2 weeks, I was there about 3 times with the community leaders, and with the assembly member there for the assembly member and the senator for that area. I believe it's Senator Jim Nielsen and James Gallagher is assembly member from that area. So we had a roundtable with the community leaders, and the insurance commissioner, Ricardo Lara, was not able to be there, but he sent me as representative for him. And I had the great opportunity to gather ideas and some thoughts and trying to figure out what are some of the things that we can do. Paradise is in a unique place because it seems like almost 90% of it just seems it's pretty much burned down. And they say at the peak of the fire, when it was going, it was traveling over 100 yards a second. It was just crazy. And you can imagine a football field. And so it has some unique challenges in many ways, but also perhaps there could be also some ideas for maybe something that the insurance companies could look at and say, this is a model city. We have mitigated our the area, we fixed it up so that it is not a high risk area anymore. So there's some thoughts in those things, there is a lot of discussion that still needs to be discussed. So let me just go through some basics about an homeowners insurance. We regulate auto insurance too, but today we're going to focus on residential insurance, and let's see where we can do on that. I think we're going to skip a couple of these videos here. These slides. We're licensing for the insurance agents. We investigate complaints, insurance fraud. We're the insurance police. Now there's a picture of my new boss. He's only been in office for I think about 150 days or so, maybe a little less. So he's just getting up and running. I had the opportunity to work for the last 3 insurance commissioners because I was the Spanish spokesperson, and since he speaks Spanish, it seemed like I wasn't going to have to deal with being the Spanish spokesperson. But yet, I have been working closely with Insurance Commissioner Lara. So, anyway, let's go into. There's 1,400 employees. We process about 800 rate applications from insurance companies, issue 190 licenses, new and renewals, financial reviews of insurance companies. We do 170 consumer assistant calls a year, investigate 3,500 consumer complaints. We cover over 84 million annually for consumers. I was one of those auditors. That's what I did for the first 5 years. I was in insurance. I was an auditor, and whether the complaint was $10 or if it was multi-millions of dollars, we took that as just as important, your complaint. So we investigate all this. Let's just talk a little bit about the basics. I think this is important because a lot of times we're finding that folks that have fire, they didn't realize what they had. So this is perhaps the best place for me to start with you. And some of the places that we've been, I've been in a lot of places and seen a lot of things, and it seems like there's been a lot of I wish I had known that type of thing. So there are a few things that I'm going to tell you today that may spark some interest in you going back to look at your insurance policy. And really, looking at specific things. And I'm gonna actually explain a few things to show you where to go and look and to help you perhaps understand that policy. And it can help you maybe rethink what you have and making sure that you have the adequate coverages. So let's just go through a few of the things basic on residential property. So there's essentially, I see it as 6 areas that your standard policy should have, okay? A homeowner's insurance policy. The HO3, it's essentially the dwelling coverage. Now this is important for you to understand. There's the dwelling coverage, there's other structures, personal property, additional living expenses, we call it ALE, also known as loss of use, liability insurance, and then medical payments. And there's something very important that you should know. You actually, oh, hello. There's something important you should know. When you get an opportunity, go back, pull the declaration sheet, the deck sheet. I forgot to tell you, I was an insurance adjuster with AAA for 10 years. And I got to see all these houses up here in Santa Cruz when they were having all the foundation issues. So I got a good look. And I also was an insurance agent with farmers. So I know about the policies. And this is one thing that I would tell you to do. If you can do me a favor, go back home, look at that policy where it says deck sheet, the declaration sheet, okay? Go look at that page. That page is going to give you a summary of everything, okay? And that will break it down into, essentially, if it's a standard policy, it will have these essential coverages in it. If it's not a standard policy, it might not have all these. But if standard policy and HO3 policy will essentially have these 6 coverages at minimum, and then there's some additional ones we can also talk about. But this is a standard. So the dwelling, when you look at that deck sheet, this is the important thing that a lot of folks don't realize. When you're looking at the dwelling coverage, that is like an overcompensing amount that these other coverages are a percentage of that. For example, you have dwelling coverage, you have personal property, sometimes it's only 50% or 75% in some insurance companies. They vary, okay? One insurance company would say, we'll pay 75% of whatever your dwelling coverage is as your personal property coverage. And they do that with other areas. So a lot of folks, if they don't have this down, the dwelling coverage, if that is not established correctly, if it is not, then everything is out of whack. You know what I'm saying? Then you have the issue of underinsurance. That was one of the big issues when in 2003, when I was handling the fires. I was dedicated just to the wildfires at that time, and the complaints coming through were a lot because people were underinsured. They weren't going back to their insurance agent. They would just let the policy renew annually, and they would never go back and talk to the insurance agent and say, hey, listen, I added another 200 square feet here. I added another 500 square feet here. I added a swimming pool. I added this or that. And, it was never rated that way. Yeah, they were paying less, but they didn't have the coverage. So that's why it's important, to stay on top of that. Now there are laws and there's regulations that kind of put a lot more on the insurance companies. Yeah, we do a lot of that. We find problems and then we try to correct them. It happens over and over, okay? There are things that just went into effect in 2019 that protect homeowners when they're a declared disaster. It used to be in my day, you only got 1 year. That was standard to rebuild your home, or additional living expenses. You only got that, so that was a way pretty much you're done. You're in a hotel, you got a year, you don't build in a year, what are you gonna do? Now you're in trouble. So then they moved it on to 2 years, and then they realized that is not even enough. So we've actually gotten it moved starting in 2019. When it's a declared disaster, you can actually go on to 3 years that you have ALE coverage so that you can rebuild your home. When you have large communities, you're kind of stuck to your neighbor. You have to reconstruct the infrastructure has to be redone. And so because of that, there's a lot of slow-moving parts. And the whole community has to kind of work hand in glove and kind of try to build everything together. So there's more time that's needed, and so we know these things. So we're constantly looking for things to improve the regulations here in the state of California. Let's move on real quickly. Let's just go through the dwelling coverage. So dwelling coverage, real quickly, is simply the permanent structure. It's the structure, anything that's attached to the home. Anything that's permanently attached to the home, that is considered the structure. You can literally have an oven that's permanently attached to the home, could be considered part of the structure. Okay? Normally it's part of your personal property, but if it's really in there where you can't pull it out, it's not it can literally be part of it. But it's one of those questionable things. But anything that's permanently attached to the structure is considered dwelling coverage. Okay? It's really about the structure. We're going to go through these quickly. This is where you should know. A lot of folks think about the amount of dwelling coverage they should have, and right away they think, okay, how much is my house worth? Oh, my house is worth $400,000. Well, I need $400,000 worth of coverage. That's not correct. You're going up. You've already gone up the wrong number. Okay, that is absolutely not correct. There's a big misunderstanding. I was in CNN Espanol the other day, last week, and I had to go through this. I had to explain this. It's important that folks do not get into a situation where they're looking at the value of their home as the amount that they should have for dwelling coverage. What you should be looking for is, what does it cost to reconstruct the home? Okay? The reason for that is if your house burns down, you still have the value of the property. That doesn't lose value, right? So you got to remember, that's why you're not really looking at that. You're looking at how much does it cost to reconstruct your home. A home in one state could be the same. Here in Arkansas could be $100,000. That same exact home in Texas could be $300,000. Come to California, $500,000. Same home. Maybe the view's not nice. Maybe the weather's not as nice. But they got a pretty good deal over there. It's just, so you're not really looking at that. You're looking at how much does it cost to reconstruct a home. And you should pretty much, if you're looking at you essentially should just call a contractor in your area, surrounding area. Call a couple of them. Call 2 or 3 of them. Say, how much would it cost to reconstruct my home? I'm not telling you that this is just a way for you to check your, kind of like double check your agent, because they have a whole system of software that they use to kind of come up with a number that's correct for you. But you check them too. I always believe in trust but verify. Does anybody live by that too? I live by that. I trust you, but you know what? I'm going to verify. My wife does it. She says, I trust you, honey, but I have to verify, Make sure you're in Santa Cruz, Scotts Valley, I have somebody taking pictures right there somewhere. I'm teasing. No, truly, I live by that motto. Trust but verify. Hey, it's your insurance agent. Trust them, but you know what? I'm going to do a little homework. And call around and find out what they charge. They'll tell you how much they charge for square footage. And especially because you're up here, then they got to move material up here, so it's a little more expensive. Consider that there could be a demand surge, because if there's a bunch of homes that burn down, the price is going to vary a little bit. We don't like them to gouge, but they can say, hey, there's a demand surge, and we got we're very busy, and we got to charge a little more. So there may be a little surge. As long as it's not out of control, because we'll get involved in that if it's crazy. Sometimes you have, by the way, contractors coming from out of state. You got to be careful with that stuff. Okay, we're not thinking that right now. Okay, let's not think about that. We're trying to avoid all that, right? Okay, but I'm getting back to making sure you have the right dwelling coverage. Okay, check that out. Okay, let's go on from there. Here's the formula. Just whatever the square footage of your home times whatever they're charging per square foot. Yes, please.
Another place where the trust but verifies comes in is when you're being evaluated by the insurance company. We live in the floodway along the San Lorenzo. We've had people come in from different states to give us a calculation on the cost of our damage. And we've had people from Texas and people from Arkansas come in and use those same figures in their neighborhood to apply to us, and found that what the insurance was going to pay was much lower than it should have been. And so understand that that's a factor as well when you're calculating your loss.
Were you an insurance adjuster by any chance?
I have become for floods now.
Okay. All right. Well, let me just say this, by the way, there's regulations now in place. The Department of Insurance is very careful about this. If an insurance adjuster because there's surges, you know, when disaster happens, the insurance companies have to bring insurance adjusters from other states. They are responsible for training them. Because we did have problems in some past fires where they were giving bad information. And so we have set in regulations and we put it back on the insurance companies that they must train. And so there's some problems there. I mean, if they start giving bad information, the insurance companies know they're in big trouble. In big trouble. Yes.
It's not obvious that the cost to rebuild includes the cost to demolish whatever's left behind. So is that a separate line item? The demolition?
There is coverage under your policy for debris removal. There is.
And how would we know if that's sufficient?
That's pretty standard in a policy. The debris removal is pretty standard in a policy. Yeah, it's pretty much. So there's coverage for that, standard for debris removal, and you know, it's usually, well, there's new laws that have been set up so that insurance companies in a community have to work together now, because we used to have problems where one insurance company would say, okay, we're going to remove the stuff, and then, you know, there was delays because things were not moving fast enough. Now they have to work together, you know, so they can pull their money together. We had in Silmar, we had a whole trailer park that burned down. I think it was like 400 homes years back. I think it was about 2007, and there was an issue with the debris removal, and they kind of pulled together. So, but it's a typical coverage that's in your policy. Yeah. It'll cover for that. It's not going to cost them $100,000 to remove debris removal. It's not going to be that kind of thing. But anyway, I'm happy to take questions, but I do want to go through a few of these things, and, you know, I really want to direct my presentations towards you, so I'm willing to do that. I just want to make sure that I hit a couple of these points, which is make sure you understand what you have. See what I'm saying? I don't want you, you know, like suddenly find out you're underinsured because you need to double check. You need verify what the insurance agent was telling you. Okay, let's go through a few things. Other structure is, for example, a garage that's not attached. That would be considered other structures, okay? It's not attached. There's some sort of distance between the main dwelling and then the other structure. It could also be a swimming pool. It could also be a fence. Okay, let's go on. Personal property. This is the way I like to describe personal property. If you can take the house and turn it upside down, just visualize that, okay? If you can turn it upside down, and everything that will fall out of there, that is basically your personal property, okay? If it falls out, pretty much, if you know what I'm saying, you get the idea, you know, anything that's kind of loose in there, you know, those are your items. That is pretty much your personal property. There's coverage for this if you travel, but be careful. Sometimes they limit the amount when you travel. Like sometimes they'll say, we'll only cover up to 10% when you're traveling, unless there's some sort of movement in 30 days. You know, and but every policy is different, so you need to check that out. Okay. So,
do you mean to say then that if I'm going on vacation, my insurance is different?
No, yes. If you're traveling to Europe and you take your cameras with you and you take your computer, your laptop, your Mac Pro, like I did the other day, I don't want to tell you what happened to it, but anyway. Yeah, so when you're traveling, some of your personal property could be covered when you're traveling. You're in Europe, you have some of your stuff with you. If you lost it, got stolen, it could be covered under your homeowner's policy, even though you're not at home.
But just because my house is vacant for a month and I'm traveling, my insurance is still as good as if I was living in there at the moment, wouldn't it?
If you were just on vacation, yeah, as long as it's not empty because you're no longer living there, there's some things. Or if you were moving, you know, from one house to another, that's different. That is standard in the policy that you would be covered. Is there another scenario you're thinking of?
I got it.
Okay, make sure. All right. So generally, personal property is 50 to 75%, but it varies. Some can be a little less. There's the actual cash value, replacement cost. These are different types of coverages related to if they were replace it without, like a television, without charging you for depreciation. If it's a 10-year-old television, they may try to take 10% for every year. We don't like them to go that crazy, but they could start taking a certain percentage because it's 5 years old, and say, hey, you know what, it's not worth $1,000 anymore. Scheduling, if you have expensive jewelry, rings and so forth, there's limits on how much the policy will pay. I call it limits within limits. That's how the insurance companies kind of protect themselves. They have these, I guess, like stop gaps or whatever you want to call them. They're like limits within limits. So they'll say, yeah, we'll pay for your jewelry as long as it's no more than $1,500. And then at that point you have to schedule it or get some sort of endorsement on it. These are just essential things. Additional living expenses. It's also based on a percentage of your dwelling coverage. Policies, it's not unusual for it to be 40%. It could vary depending on your policy, depending on the insurance company. Pays for laundry, hotel, motel, to lease a house, pays for your breakfast, lunch, and dinner. And so it's good to know what it is. Pull that declaration sheet because it's going to summarize all this for you. It's going to tell you exactly what your coverages are and what it's paying. Okay, liability obviously pays for if you're getting sued, claims against you, injuries of non-residents, as long as it's not your own wife that fell or your own husband that fell in that house, or somebody that lives in your house, that they could actually sue you, and this portion would be the one that would cover you. Does cover you for bites by pets, as long as there are certain pets that are excluded. Protection against lawsuits, okay? And medical payments covers for expenses, non-residents, no negligence. They're very small amounts, 1,000, 5,000, sometimes they'll go 10,000, sometimes they'll even go to 25,000. But these numbers are very minimal. And the difference between this and liability is, let's just say you have somebody visiting from Europe somewhere. They're visiting with you, or they came through the front door, you left your water hose out, they trip. This would cover them immediately without question to liability, whether it's your fault or not a fault. It will quickly just, they didn't have insurance here in the U.S. It would cover them for any emergency treatment up to the amount of this limit. Okay, so this is not for pain and suffering. It's just for medical expenses and other lost wages and lost work. It doesn't cover that. Just for medical treatment. Okay. Perils that are covered. Anybody know if that's covered? Lightning? Is that a standard policy that's covered? How about this one here?
No.
Earthquake.
Earthquake insurance.
Fire?
Yes.
Standard policy? What?
No.
Yeah, you're right. These are the only two that are not covered. So, yeah, it's pretty standard on the policies. Earth movement, not covered. Very unique situation in Santa Barbara. You remember Montecito that happened 2018, 2017? I'm losing track. Yeah, so it just happened. The flood, yeah. And believe me, I was really intricately involved. We were there at least a couple times with the community and had workshops. We brought our various compliance officers, just set up appointments with the people. But the mudslides are not a covered peril in the standard policy yet. And I've been watching this because remember, I've been doing insurance for 30 years and earth movement is not covered. We saw these houses back in the early 2000s when the houses in the Laguna Hills, Laguna Niguel area, there was a few houses that just slid. They were up in the hills and they just slid, and that's not covered. And we were like, wow. We were watching this on TV and we're like, that's not covered. You know what? And as a department, the Department of Insurance, unless it's insurance, how are we going to help? And we're like, wow, it's a legal contract, and in that contract it says earth movement is not covered. So fast forward to 2018, it rains. The fires come into the Santa Barbara area, and then just a few days later, I think within 10 days, the rains come. And the insurance companies are looking at the mudslides and everything, and they're saying, oh, you know, we're not covering that part. You know, yeah, the fires, okay, we'll cover the houses that burned, but these other houses that didn't burn down and they were okay, and all of a sudden the mudslides came, they're not covered. And so we started looking at that, and we started looking at it a little bit further. And we found that, in fact, we could get the insurance companies. We felt that we could get the insurance companies, let's put it that way, to pay on them. Because we found a law in the state of California that says the proximate cause is what matters. And the proximate cause was the fires. The fires is what caused the earth to move, to loosen up. And so then when the rains came, everything else, all the debris and everything else started moving down, and it started destroying houses that were perfectly fine. So we went and we sent out letters to all the insurance companies, and we said, you guys are gonna cover these. And the insurance commissioner was able to, because we had law on our side, okay? And we were sure, we thought we were gonna get resistance. All the insurance companies agreed except two of them said, hey, insurance commissioner, we don't completely say no, but can we deal with this as we get to that place? And from what I understand, they all ended up being covered, even the two that were resistant. So I want you to know that we are active. We're looking for ways to improve on these things constantly. Okay? Yes?
What about a fire that's caused by an earthquake?
Yeah, a fire that's caused by an earthquake. So the earthquake would not cover it, but once the fire begins. Okay, so yes, it would be covered. A gas line. Then
The insurance company isn't gonna say that was in the earthquake and you don't cover earthquakes?
the earthquake part is on its own, but once a fire starts, then that is covered.
There's a precedent.
Where? Yeah, and you know, I'm always careful when it's another state because there's regulations that are a little bit different, but it's true. You know, insurance is pretty, you know, kind of like, I was at Katrina, I was on loan to Katrina in Louisiana for over a week. I think it was 1 week or 2 weeks out there. And it was a lot, so much similarity. So I would say it's pretty close, but regulation in the state of California is even at a different level, so it's probably for sure, yeah. But yeah, absolutely, if there's a fire, there's an earthquake, but then there's a fire, the fire would cover the damage.
So I live on a hill, and what kind of coverage would I need to have for earth movement if there was flooding to the point that my house was on a hill? I already have earthquake insurance.
Yeah, as far as homeowners insurance, the homeowner's peril, it's not a covered peril. And I don't know that there is a earth movement policy, but there are insurance companies out there and what we call the surplus line. The surplus line are insurance companies like Lloyd's of London. I've dealt with Lloyd's of London. I've dealt with a lot of these surplus line brokers, okay? And they'll insure everything. You know, they insure a baseball pitcher's hand. They insure odd things. So it's possible if you were looking for, absolutely want to get something like that, you can look in the surplus line market. This is that you need to know though, they do not have backing by the California Insurance Guarantee Association. So every insurance company that's an admitted carrier in the state of California has this, it's, you know how you have the federal,
FDIC?
yeah, FDIC, thank you. You know, FDIC for up to 200,000, wherever it is, for your deposits and what have you. It's kind of the same thing, insurance. If an insurance company, there were so many losses in California where everything just fell apart in the insurance company, then you have this California Insurance Guarantee Association that is kind of like the reinsurance of it, and it backs up the insurance company. You wouldn't have that if you went to the surplus line broker. But I haven't seen a lot of problems with them, even though it's more of a risk. It is a risk. If they go,
If you look at a policy that when you get a quote from an agent,
Is it going to state clearly on it whether the insurer is an admitted insurer or not? So you can assess whether you have all of the risk coverage that you would get from the Department of Insurance that you talked about at the beginning. Which
Yeah,
you
they-
wouldn't get if the guys, for instance, go broke because they're not admitted and they run out of money.
Right, yeah, they should be telling you that, they should be telling you the risk, because they have, as an insurance agent, they have a fiduciary responsibility to explain to you these things. And if not, then you could sue them. They have a very specific policy, which is called errors and omissions. Every agent has to have it, every agent that, or broker knows that. And so then they're in deep water if they don't literally explain to you what you're getting into, that you're getting the non-admitted carrier in a surplus line market. They need to be very clear that you know that. Let's go ahead and take questions and go through the, yes.
All right, Senor Mesa.
Si, senor.
My colleague and I, we are local realtors. We live in Santa Cruz County here, and we sell a lot of homes. I think together our teams do a majority of the business in the 9533 and some down here. A lot of our clients are coming to us now and saying, hey, my insurance company, after 30 years with AAA, they're not renewing. It's a very hot topic. Each year it's been increasing, and since the campfire in Paradise, it's really epidemic now. We see a number of the larger carriers just not writing policies in danger zones. I'd like to get your insight on, is this trend going to continue? What kinds of options can we tell our homeowners? We are starting to see some smaller carriers start to pop up that we don't know their names, they're not fully vetted, is this legit? That kind of conversation, I think, is probably going to cover a lot of questions in the room.
Thank you for your question. You know, I was just in the city of Poole, which is my Placerville, on Friday and Saturday. I had an audience probably as large as this, maybe a little larger. And the same question came up. I'm getting non-renewal, I'm getting cancellation. What's going on with the value of my property? Is it gonna go down? Because, you know, folks, you know, houses are sitting on the market because when people find out, you know, with the insurance bill, I guess that's part of the closing. You know, and so.
Can't get a loan without insurance.
Yeah, I'm saying.
Straight up.
Yeah, and so, you know, they're, once they start getting the quote and that part, they're like, wow, you know, this is, you know, twice what I was expecting, in some cases more. So it is absolutely very common. Same thing happened in Paradise. When I was there was a lot of discussion about that. We're specifically when we're dealing with the WUI, the urban interface, this is what you're dealing with. There is a lot of challenges because you're more at risk. So we can't force the insurance company, it's a voluntary market. We can't force the insurance company to sell here, sell there. And some of those things tie us as a regulator. So all I can say, I've seen trends. I've seen trends that have happened. I've been doing insurance, like I said, for 30 years. I was adjusting since 85, you know, pretty much somewhere around there. The year 1985, I know some of you probably were even born at that time, right? But you know, it really is. It's one of those things with trends. It goes up and down. The Oakland fires, they stopped selling. There was a moratorium, said we're not selling insurance anymore. You know, we don't want to do that, and then it kind of comes and it goes. So it's one of those things. Honestly, it's hard to predict. Right now, this is the time where everybody's kind of nervous because they're thinking, is this going to be an ongoing thing? Is this a year-round activity? Because you know, we hadn't seen kind of the devastation that happens in 2017, 2018, and 2000. I mean, that was bad. 2017, 2018 was really bad. You know, and I think we've had a few here and there in 2019, but we really got hit really bad. It seemed like it just went like a whole year round. So we're like, is this the new way of how things are going to be? We're hoping that's going to die out because our insurance companies obviously are a little nervous. They have to have a certain amount of reserves. We have been looking at them and we still feel that they are fine with the reserves. They're doing well, but things could change. Let's take some more questions.
What's the reserve got to do with it though? You didn't answer him.
Yeah, I like that.
Go ahead. They can drop us if they want. That's what you're saying. There's nothing you can do about it, nothing you can help us with.
This is, so let's go through that, and I have no problem staying here to the rain, and I realize that the questions are gonna come like this, believe me, I was expecting this, no, don't worry, I'm here for that, I'm here to try to help you through that process and answer these questions. And believe me, I'm not trying to sidestep it either, okay, but I'm gonna be very clear with you, okay? So, there's gonna be issues in some places where the insurance companies say, we're not gonna renew you, okay? We're not gonna renew you. Now, let's
Can
do
I
this.
stop you for just a minute though? What kind of notification period are they required to
Sure,
give you?
sure. And let me get to that, but let me first finish my thought here on this. So there are insurance companies, first of all, they have the right, because it's a voluntary market, so they can say, we're not gonna renew you. And,
Without reason.
well, they could say it's a high-risk area for them. They're concerned, they saturated the market. There's some insurance companies that have actually saturated certain areas, and they're saying, hey, listen, we'll keep the policies we have. Like I was in Cool on Saturday, and there was a lady there, I forgot the insurance company, but it was one of the major insurance companies, large insurance companies, and she said, hey, I know a lot of the people in the audience were getting canceled, but my insurance company right now is saying, holding steady, but we're not getting new business. So they get to make that decision because they look at their risks. And so,
But where is the fairness in this where they can take my fire away? I understand that.
Yes.
We're in a bad area. But to take my whole homeowners?
yeah, so let me answer your question, because I don't want to forget her answer too. So then what is happening in the state of California, if they do, say that they are going to remove your insurance or cancel it or not renew it, then you have the opportunity to go into the FAIR plan. That's the last resort. Okay? It's called the FAIR plan. That's a place of last resort. Okay? You can get into that. It's an insurance company. It's a quasi-government insurance company that was created because of it's a place of last resort. Okay, so you can absolutely go there. Like I said, all the insurance companies had to pull money into it. The government, kind of has some involvement in it, but we regulate it just like another insurance company. If they do send you a letter notice, they have to send it to you at least 45 days in advance.
Okay.
At least 45 days in advance, unless it's a disaster. If it's a disaster, they got to renew it. It used to be for 1 year, now they have to renew it for, I believe, at least 2 years, and I think they may even have to go beyond that. Yes?
I was just curious how many people here have gotten a letter, because I have.
All right, let's see a show of hands. How many have gotten in the last 30 days, 60 days? That's, okay, cancellation. So that's an issue. It's an issue. We're seeing that. I'm gonna be honest with you. It's big. One of our, I saw the news on Friday. They were talking about it in Placerville also. I was there, but our Sacramento office was talking about it on the news. It is true. It's a voluntary market. We can't force them. So we're trying to come up with ideas. We're hearing there are some things that are being discussed. I had somebody in the city of Cool, a gentleman, businessman, said, hey, what would it be to set up some sort of insurance? Insurance company, I said, well, we have the resources for that, but then again, you can't saturate a certain area. You saturate an area, then that's how insurance companies go under. They have to, insurance 101 is to spread your risk. That's number one. I'll come back to you, but go ahead.
Okay, so this is just a sort of a thought. One of the things we see in real estate is, with lenders, when they're issuing loans on homes, they want to know that the home has what we call Section 1 termite clearance. So oftentimes they'll say, hey, let's make sure there isn't any dry rot, termites, beetles, and this kind of thing, and show that to us before we give you your loan. With the Fire Safe Council and the FireWise certification program that is being rolled out now that our fire colleagues talked about at the beginning, in real estate, there's this sort of thought now that there's like a fire Section 1 clearance that may be coming for the insurers to have a better understanding of what their true, because every property is unique, right? And so the thought is if you can get through this FireWise certification, quite possibly an insurer will see you as a lower risk, you might insure your house over your neighbors who doesn't have that. Are there discussions like that and support for things like that, and what do you think about that idea?
Yeah, we're getting into the weeds, but I'm gonna.
Little bit, but it's
touch-
important.
Yeah, no, I'm gonna touch on this right now. So the situation is this: you can have one insurance company who looks at a house and says, "This house is insurable. We'll insure you," which happened in Big Bear, by the way. We had a big issue about 5 years ago. I was dealing with this particular issue. House is insurable. Insurance company said this is insurable. The next insurance company comes along, and the house next to it is identical. It's in the same area. Shrubbery, everything looks the same. Everything in the defensible space, everything looks the same. And they say, absolutely not insurable. What is happening? What is happening? So what is happening is this. What the gentleman here says, saying, what's your name again? Ed is saying here is there some sort of a, can we get, signed off and say, hey, this house has a perfect defensible space. It have mitigated everything to the point where this house is ready. It's got the vents that don't allow the embers to get in the house, because we know that's a major issue, by the way. That's where a lot of the fires start. They come in through the vents. That's what started all, because it's usually not the outside. It's once they get inside, and it starts. That's what happens. It's the vents, the embers. Pardon me? The vents from the bottom. Those are that's where a lot of the fires come.
And the soffits.
Yes. That's where the fires. Yeah, because anywhere that they can get in, the embers. That's when you notice all the fires coming through the roof. Yeah, but usually the roof is okay if it's just hitting embers, but once it gets inside, it's burning from the inside out. So let me finish this thought. So that's the problem right now is the Department of Insurance cannot regulate the models that the insurance companies use because there's proprietary information. They feel like, hey, so we're hoping that perhaps there is legislation, because that's how we're able to have the teeth to perhaps, that is one way that we could, kind of say, hey, listen, now we understand what is going on in the background. And so there are some things we cannot control. We can't control where an insurance company sells, if they want to sell or they don't want to sell. It's just it's a voluntary market. So we're in issues, but I have to get back to the issue, to the point that you can go to the fair plan. Okay. Now, I gotta finish this thought, because if not, you guys I'm gonna be in trouble. Fair plan is just kind of a skeleton policy. So then you get a fair plan, and then you get a differences in condition. We call it a wraparound policy to make it a complete policy. So you'll have a fair plan, and then a separate policy for your content, your personal property, and the other things. Okay. So it's a two-step policy. It's not the perfect, and it can be a little more expensive. Yes, all these things. We understand. We're trying to figure out ways to make this work, but there is a place. So I want to make sure that. Let's keep going around the room here. I think that lady in the back had your hand for a long time.
So, to piggyback on his question about notifications, we've gotten several notifications, threatening notifications, not cancellations, but that we basically cut down all of our trees, not just the defensible area and the around structures, but the forest that we chose to buy and live in. I'm not gonna willy-nilly go out and cut down 30 to 300-year-old trees around the perimeter because of these threatening letters, unless there is a legal basis that they can use that as justification to cancel or not renew in case of a disaster. So,
They're looking at risk. So just so you know, I had the same situation just last year. Somebody in San Bruno area, Pacific area. They had, the lady came up and had that question. She had done all her due diligence, defensible space, the place was immaculate, okay? But just, a couple 100 yards away was a backyard on the other side of her fence was county property. She couldn't touch it. She couldn't get in there and touch it. And they were threatening to cancel. They told her the same thing, you gotta clean up that forest back there. And in reality, they look at risk, so they're seeing that as a risk potential for them. And if that's not cleared up, then they're going to do a cancellation.
so that's legally justifiable from your your position?
As far as they're looking, it's a voluntary market. So they're gonna look at what is a potential risk for them, and if they see something there, they say, oh, you know what, this is a risk for us. Then we have to justify, selling to somebody in this area that is just a high risk. And that's something that they
So
can.
why isn't there standardization along the board the same way? You look at this property, why don't they have some kind of a guideline where, this is, a defensible
Sure.
area next door, well, you need to do this, I mean, it just doesn't
Sure.
seem, they're in it to make money.
Yeah.
We all understand
Yeah.
that, okay? We're losing money.
Yeah.
And we're doing everything that we possibly can to protect our area.
Yeah.
And it just doesn't make any sense. It's not a win-win for us at all.
No, I understand. Like, once again, there are areas that are, higher risk. And right now, the insurance companies are a little nervous, so that's where they're at right now. There is risk for them. So they're saying, listen, somebody else may be able to write it, but we're concerned. So, that's the problem we're at right now. Yes.
Is there a possible potential parallel with the California Earthquake Authority, where the state has some kind of a backup plan, like CEA?
Yeah, so kind of, from what I understand you're saying is, could there be, like with the earthquake issues, can there be another, kind of, entity, like a state entity, just like the California Earthquake Authority, that relates just to fire? The Fire
Right.
Insurance Association, or whatever you wanna call it. There are some things they're working on with the governor, the commissioner is. I don't know how far along they are on it, but there's discussion that's happening. We have some, as a matter of today, we have some people in LA talking about, some of the things they feel they may be connected to climate change. They're having that discussion today in LA. But nothing, it has to clear the legislature in order for us to be able to do something. The law requires us, we can't just do whatever we want. We have to have it based on the law, on the regulations, and we can tell insurance companies, hey, we got law, we got regulations. And that's what we've been doing. We've been moving things along that way. We find problems, and then there's some things you can't anticipate.
What are they trying to get on zip code?
Pardon me?
Zip code. I mean, we're hearing stories now that if you're in zip code area, like you're out. Hey, we may live out in the desert, a high desert here. Can they really do that? Can you protect us on something like that?
Well, you're talking, once again, that comes back down to risk. So if there is an area, a zip code that is a risk, then they're going to look at that. The insurance company are going to look at that.
So can they blanket just the zip code like they're talking?
If it can be justified, now if for some reason somebody says, hey, listen, I'm not in, my zip code is the same zip code that's attached to that area, but we're not in a high risk area. If you have a question about that, you can actually file a complaint with us, and we'll investigate if they are. Let me keep going around the room, because I know some of you are double dipping, but I want to make sure. Yeah, I think you've been on here. Just go ahead.
I think it totally relates to what we're talking about.
Yes.
But like, probably a lot of people in here, we have Allstate for like 30 years.
Yes.
And every year they try to find any reason to get rid of us. A little patch of leaves here,
Yeah.
a little of this, piece of plastic on the house, any little thing. And every year we correct that. We would correct that condition.
Sure.
And they'd even cancel this and then reinstate us because we just bugged them so much and said, yeah, but we corrected it. And then Cal Fire came out and they canceled us. Again, every year they found just any reason because we lived in
So they kept
in that
trying-
area.
Okay.
Cal Fire came out and they did their 2-page assessment of our
Right,
property.
right.
And everything was perfect.
Right.
And we emailed it to our insurance and they said,
Right.
that'll do it. And that was the end. They reinstated us and we were done. So Cal Fire seemed to be a really good, it's a state commission.
Yes.
And they do their inspections
Yes.
and they said, and we haven't heard from them since.
Okay, did you hear that? So he's been with Allstate forever. They keep threatening him and they say, hey, you gotta do this, and he would go back to them and essentially get everything, defensible space and other things. And he actually had Cal Fire come out and, you know, kind of certify everything, give him tips and get everything corrected. And he's still doing well with Allstate. So I'm glad to hear that. Now, I'm not telling you that's the testimony that's happening for everybody, because there's people that have been doing this, they're getting signed off by CAL FIRE, what have you, and they're still, the insurance companies are still canceling. So that's not the standard, you know what I'm saying? That's wonderful that's happening. Yes?
CAL FIRE, just so you know, used to have 4 people who would go out and do these L100 inspections. They have received cuts in funding, they only have 2 people now who are able to do it. So they want to be doing them, they need to be doing them, but they don't have the funding.
So if some of you folks might be able to, you know, find, you know, some help, you know, in doing that, maybe as a community, talking about maybe some more grants for that. I don't know. Yeah, I know there's some hands here.
Yeah.
Okay, sorry about that.
Yeah, from what I remember, after the Northbridge earthquake,
Yes.
several major insurance
Yeah.
companies said they would no longer
Wonderful.
write homeowners insurance
Yeah.
in California.
Absolutely.
And the insurance commissioner came back and said, sure, we can do that, but then you won't be allowed to, write any other insurance policies, including auto,
Yeah.
and that changed their minds.
Yeah. Let me tell you what happened in Northridge. After Northridge earthquake, really essentially is when you really got this, the earthquake authority really straightened up, you know. A lot of insurance companies started backing out. Century 21, what happened is their sales agents had saturated Northridge and started selling insurance in Northridge, okay? They got crazy. As an insurance company, like Insurance 101, like I said, is always spread your risk. I mean, that's from back in the day. Used to send your merchandise from, you know, overseas, from Europe to America in 3 ships so that you spread your risk. That's like Insurance 101, okay? Because if some of it got there, then you're okay. But if it was on one boat, then you would lose 100%, right? And that's what they did. They saturated the market. They almost went under. As a matter of fact, farmers took over them, I believe. But yeah, they actually, there were some other things that were going on there besides that. It wasn't just as easy as that.
But it's the way the insurance commissioner handled it, that's sort of put the fear of God in it, because the auto, policies are invested in the US,
Yeah.
spending the most money.
There are some things we can do, there's some things that we can't do. So we try to go according to what the regulations and the law allow. Just go ahead.
You notice it's a volunteer market.
Yes.
And there's fluctuations, disasters come, they reinstate after, but what can we as consumers do for this? Because it seems like, could we, at a consumer level, do something legislatively to bolster your ability to create some regulation? I mean, frankly, there's no rhyme or reason how these insurance companies are canceling people. I've had people in the community with the same agency, they just, like they were saying, they pick a house, they don't pick a house. There's no rhyme or reason for how they're doing this. So as consumers, what can we do?
Well, there's maybe a few things I'll say about that. First of all, as I've been traveling, one of the things that I'm doing is, and that's what I'm doing here today, for this week, these couple of days that I'll be in this area, is also getting feedback from the communities. And I'm writing kind of an explanation of what I've seen, some of the comments. One of the things I think that's important is the communities to begin to have discussions with the legislators, assembly members that represent this area. I mean, they can make a difference. They can make a difference on legislation that's passed that could strengthen us, you know, some of these things. So maybe a lot of discussion needs to still occur. I know that I'm supposed to be with some of your community leaders tomorrow, and kind of in a smaller setting. And so maybe some of that discussion will happen there, some ideas. But it is an ongoing thing. I understand. There's a lot of frustration. And I understand. It's very it's affecting your livelihood. Some of you are in retirement. Some of you are you moved up here, and you have a real nice setup, and it's a tough situation. So I'm conscious of that. We're looking for what can we do to improve. And I'm letting you know that I've been with the department these 20 years, and I've seen them move the needle, new regulations, new things. I haven't seen it at this level, okay? As far as the cancellations, I don't think I have. At least it seems to have pretty much you know, everyone is kind of getting the same, you know, the notices and non-renewal, so we're very well aware of that. But we're in the middle of that discussion, getting feedback and trying to find a solution. Continue on here.
Are you aware of any legislature either in any part of the state who is actively working on this right now? Who is somebody that we as consumers can contact and put our support behind? Or is it something that we just have to approach here locally? Because this is obviously a statewide issue.
Yeah, so there's constantly things that the Department of Insurance, like for example, last year we had, suggested, I think something like, I don't remember exactly the number, but it was something like, from what I remember, maybe about 20 or 25 different changes in regulation law, and only a portion of them got passed. So we're constantly coming back, and asking, because you have to have the legislature agree, and then you have to have the governor sign it. So I can't tell you where it fell, but there's constantly things that we're recommending. A lot of times, the changes come from officers that are dealing with these things, and they're like seeing the same thing come over. Same issue comes up, and then finally we're like, hey, and we have a system set up in the Department of Insurance where rank and file literally says, hey, there's this issue that's coming up over and over and over. We need to look at this, and we've actually made recommendations for legislative changes. So it's a kind of a moving thing. It's happening in different ways. There are senators and assembly members looking at things.
I wonder about Jerry Hill up in San Bruno after the PG&E explosion. He has really been very proactive in many facets of that. But nobody's name has come to the fore.
Yeah, no, I can't, it's just, there's so many folks working it out there. There's things that I might not even be aware that they're actually working on. So I would say the best place to start is the local, the local folks here. And hopefully they can get something through.
I believe there's something happening in the governor's office directly right now.
I'm sure there is. We're working with something with a kind of a reinsurance. Our commissioner was working with something with reinsurance for these fires. But I'm not sure if that actually got passed or if they were, I know there was some discussion on that. So yeah, there are some things, but there's so many moving pieces right now. Let's see if we can keep moving. Yes?
I was just curious, you didn't say a whole lot about the FAIR plan, so.
Oh, sure.
Is that something that's comparable to like in the auto industry, it's called assigned risk?
Yeah, that's pretty similar.
Well, with assigned risk, I know that for insurance companies were required to do a fair percentage in order to, that it will assure the people that they could get the insurance coverage, correct?
That's the same thing.
So in other words, but this is just one company
Oh, yeah,
covering this?
absolutely.
So that's not the same then? Because every insurance company with auto had to take a certain percentage of the assigned
I
risk.
see what you're saying. Okay, so, yeah, so there's kind of like a little bit of misunderstanding about how the assigned risk program in the auto works. But essentially what happens, everything goes to the assigned risk department. So what they do is then, according to how much business you have in the state, like AAA is a major player in the state of California. So then what assigned risk does is they assign it to insurance companies.
Right.
They don't take it on. Everything comes into assigned risk. You may sign up with a AAA adjuster, but your policy goes to assigned risk, and then the assigned risk department actually places it. And many times it doesn't end up with AAA, even though you went to AAA agent. So you're placed.
Right,
So that's
you get something.
yeah, so that so it's kind of an all-encompassing, everything comes into one place, and then it's handled by the insurance company individually, it is true. But this is actually an insurance company, Fair Plan. So maybe there's some comparison to it, there's something that's similar, but not in every way, I guess you could say, not in every way. But it's an actual insurance company. Fair Plan is an insurance company. It's regulated just like we regulate another insurance company.
Come on.
And
Yes.
what's the fair plan cover? Do you have another
It is
plan
just
also?
it's just a skeleton policy. I would encourage you to go to Fair Plan, Google it, the Fair Plan, California Fair Plan, and it'll give you the basics on it. Once again, it's a skeleton policy, so then you need what they call a differences in condition. It's a wraparound policy, and that would put you back at a full policy with full coverage. Yes, please.
Thank you. I know you can answer my question now.
I'll try.
I maintain my property and I think I have a defensible space. However, I have an absentee landlord who was rented to someone and they have everything, all the trash in the yard. I've called him many times, he's not done anything about these people. They don't clean up the yard and it looks like a fire hazard to me just by looking out my window. I'm afraid if something starts there, I didn't go on vacation this year because, you know, they're there.
Yeah.
What do you suggest I do if you were to adjust their insurance?
Yeah, you, unfortunately, that is not an insurance issue. You would have to get involved with the city. You would need to get the city involved. That's the insurance.
I call Cal Fire.
Yeah. That is not an insurance issue. So you really, the insurance company couldn't help you on that. There's nothing in the policy. There's nothing with our department. We could help you with that. That's totally a city issue, you know, with anything like that. It would kind of be outside of our regulation or our authority. Let's keep going.
I want to go back to the dwelling.
Yes, yes.
This winter I did, work with my insurance. This winter I worked with my insurance company to update my insurance, my dwelling coverage.
Yes.
And I did a pre-starting takeoff, making sure I knew exactly what my square footage was and signing my schedule. Sorry, I don't have one.
She doesn't have a voice, so you can
So anyway, what they did was send out a contractor. They said, we don't do it, but we do send out a contractor that does just this. They send someone to the house. That person looked at my house and walked around and then said, okay, we'll get back to you in a couple months. And when they came back, they increased it like $100,000, but I had noted there was like 1,000 square foot difference in what they had stated the square footage was and what we actually have. We had made improvements from the original time we bought the house 6 years ago, you know, solar and all sorts of things. So it's disappointing. They basically said, this is all we're gonna increase it by. They said, we have a special rider that allows us another 25% in case it goes over, so you should be happy with that. But was that the correct response? If I'm concerned and I'm willing to pay, I said, it's not a matter of what I'm willing to pay, it's a matter of I wanna make sure we're covered.
Of course, yeah.
And they said, well, this is all.
Yeah, so essentially her insurance company, they were not assessing the value of the house correctly, the square footage and what have you. I would say this, is that you're a prime person to file a complaint with us. We want to know what they're doing, why are they doing that, what's going on there. Because if they're doing that to you, they're doing it to somebody else, and that's a red flag for us. Okay, so we need to know, call the 800 number, 1-800-927-HELP. 1-800-927-HELP. We'll open an investigation on that, and that question without a problem. There was a question over here, I know you were.
Yeah.
Did you say, come on, man?
No, yeah, the real estate guy here was saying, you can't sell a house now if you can't get insurance.
Yes.
So what does that mean to us? Us that are retired, our house is paid off, they can take our insurance away. What about us in here that have a loan, again, with the bank?
Yes.
And the bank, they're not gonna let the insurance company pull it, are they?
Yeah, so you have, the options you have is either going to the fair plan.
No, the bank is saying, hey, you can't take your insurance because we've got a loan with them. That's the only way they can keep it.
Right.
So, can they take the insurance away and then the bank can take our house?
No, I think what I'm saying is actually correct, sir. You can go to the insurance plan, the fair plan is an insurance that would replace your insurance, so you would be fine with your mortgage, there wouldn't be an issue there. Or you can go to a surplus line market.
So the insurance can take the insurance away from the homeowner,
No.
even if he's got a loan on his.
No.
Wait, to clarify, I think you are correct. I think the insurance company can back away if you have a loan on your house, but you have to get insurance and you have the surplus market option and the fair plan.
The bank will require.
And I was hoping to hear some magic about a third option, but it doesn't appear to be magic.
Yeah. In other words, there's a place that you could find insurance. So it'll meet the requirements of the mortgage company.
Wow.
Yeah.
This type of
We only have time for one more question, believe me. Yes, and I'm gonna go like this again, later, but listen, what I'll do is after we get done here, I'll be in the back, okay, cleaning up here, and if you wanna come and talk one-on-one, yes.
My neighbor was discontinued, they had the
Yes.
same insurance we have.
Yes.
And they got a broker who got them a non-admitted
Yes.
company.
Yes.
I'd like to know what your assessment is of the non-admitted companies versus the fair plan. Which is better, why is it better? Which, if we have those two options, which way is better to go?
Yeah, that's totally up to you. The difference is obviously you don't have the guarantee behind the surplus line. So if something happened to them where they did go under, then you wouldn't have the backing or the.
But how can you find out if they're a legitimate company
No,
or
no.
a good company?
Yeah, so there's two tools on our website. One of them I call it the report card at www.insurance.ca.gov, www.insurance.ca for California, .gov for government. If you go there, you can actually do a comparison first of all, on different insurance companies, and it shows you what coverages they have, but also I call the report card. It's called a complaint study. And you can see which insurance company is getting more complaints than the others. But thank you so much.
Okay, let's put our hands
All right.
together.
Thanks. I'll be in the back.